Welcome back to another Bitcoin and Ethereum analysis. So starting off on the monthly, since we've just had the opening of November. Looking at the monthly, we've been trending since the start of 2023. And of course, it's the last quarter of the last year in the 4-year cycle, which is where Bitcoin always tops. So is this time different? Well, I think this 4-year cycle has been very different to cycles before. The price action, you can clearly see the structure is completely different to what we've had in the past. 2021 was, it started to change. If you look at anybody who's into Bitcoin knows exactly what these charts look like. And the first two cycle tops were obviously very explosive. 2021 was a lot, it was muted. And that's because of the release of the Bitcoin futures that was made available at this time. So, and you can look. In fact, the volume here was driven by spots. The volume here was driven by futures. So I think with the advent of ETFs, with institutional money, coming to the space, clearly on the chart it is different. So perhaps maybe this extends into 2026. We don't know. This asset's only been around now for, I think this is the 17th year since the white paper was released. So 16 years, give or take. And this asset is fairly still new relative to other financial assets. So time will tell. But one thing's for sure, we've expanded, we've now consolidated. We've swept the range high. We have also technically, swept all this other liquidity here, but there hasn't been any swing lows that we've swept. And this monthly candle would have to kind of close, inside this previous month range for us to create a swing low. But what I do think is this fair value gap is what I'm aiming for. I've been talking about this for quite some time. We've got this, 100K sell-side liquidity here from the previous month. And since we've taken out the previous month high, we can expect the previous month low. Granted that the lower time frames confirm that order flow. But I think given the fact that we've expanded, we've consolidated, I'll be looking for longs in this area. We also have the Yeti open. We opened the Yeti candle, we consolidated, we dropped into discounts, this fair value gap. We expanded, we've consolidated. I'd like to see a sell-off straight into the monthly fair value gap to bounce at the Yeti open. And from there, I'm not too sure, but what I can tell you is that we should bounce at the Yeti open. If it fails, it will just roll over. But that's fine. All we need then is that bounce for Ethereum to outperform. And I'll get to Ethereum in a moment. That's what I'm using for buys simply because of the macro conditions. But Ethereum always outperforms Bitcoin in low interest rate environments. Quantitative tightening is coming to an end at the start of December, so in a month's time. And basically the Fed is going to be increasing its balance sheet again. So that means more liquidity in the market. Ethereum always outperforms. And so that's what I'm looking at. And I mean, the chart says the same thing, which we'll get to in a moment. So looking at the monthly, I've got these targets. I want the previous monthly low, this monthly fair value gap, and the Yeti open. There's also a CME gap at 92,000, which is, there's a lot of confluence. And now when we look on the weekly, I mean, I'm bullish, right? Not in the short term. But overall, with this range, with this internal range liquidity here, this previous weekly low, sitting at which forms the monthly fair value gap, there's that Yeti open. Also, the standard deviation from the manipulation leg that's swept the previous quarter. One standard deviation also lines up with this weekly fair value gap. If we sell off and displace lower, which I'd love to see, and kind of just sit around here, we could wick into this zone, into this weekly fair value gap, the Yeti open, etc., etc. Right? So you might be saying, well, wouldn't price be trading below the monthly? Of course. But that's fine because it's so long as the monthly candle trades back above and closes above that, right? The wicks do the damage, the bodies tell the narrative, as RCT always says. And so at the weekly chart, we've swept the quarterly high, the previous monthly high, also this weekly high here as well. So both two sweeps of liquidity, high and low time frame. We then had a change in the state of delivery by closing a candle beneath this candle here that led to the sweep. And we also came up to sweep this buy side liquidity, which is more clear on the daily, which we'll get to in a moment. And so we've opened the month and we are trading lower at this point. So if price does manage to bounce from this level, so say it does, we could be forming a swing low here on the weekly. But I don't want to see that. I want to see price drop into discounts of this range. We can clearly see that we are trading, well in premium of this range. So I want to see us drop into discount, because look what is sitting in discount. Just above that is that sell-side liquidity. That's the liquidation event wick, by the way. And look at everything that we were talking about: the monthly fair value gap, the yearly open, the standard deviation, the weekly fair value gap. That's all in discounts. And this is clearly just a range. In fact, sweeping the highs here could actually turn out to be exceptionally bullish, because if we sweep the highs, then the lows, that's double purge theory from market maker trader. That's where you get these explosive moves. So this is where I'm looking to get involved. And I suppose a lot of people are starting to look at these levels. We just got to be patient. So let's look at the daily, see what else it has to say. And here, I spoke a few weeks ago about this liquidity. So price came up, swept this previous high. It was also inside that daily fair value gap. And we've sold off. What I want to see now is the daily close beneath this candle, right? That's a continuation signature. Then I expect these lows to get taken out. So here's some really nice relative lows. And that's your low-hanging fruit. And by that point, we should then get a cascading sell-off. Right? Lots of longs sitting beneath here from this liquidation event. People went long here, here, here. That could force that kind of like a long squeeze. And I want to see a candle like this. I want to see displacement straight into this area, a bit of consolidation, and then a manipulation down to this, and then we should be forming a really nice market maker model. That's what I'd love to see. There's your first sell-off, your first range. Market makers accumulating long positions, another sell-off, small little range here, manipulation, smart money reversal, and then trading to these highs. And again, like I said, we don't need to make all-time highs. We just need a bounce here. Even if it drops lower than that, down to 90 below the yearly open, all we need is a bounce at this level. If it rolls over, fine, so be it. Because what I'm interested in is Ethereum. So let's look into that. Okay, so let's just zoom out here on the monthly, because this is exceptionally bullish. So if you watch my previous streams, you've seen me talk about the unicorn. Right? We opened the Yeti, dropped lower, swept the previous Yeti low. Yes, we have taken on a previous Yeti high, but not on the CME futures chart. So also, if you look at the CME futures chart, you'll see that these lows had been swept. This move here on the CME futures swept these lows. And I'll look at this monthly expansion with the shallow retracements. I expect the next thing to be is continuation of this move. Expansion, retrace, expansion. And that would make sense. Looking at the chart, that makes sense given the macro conditions, because we know that Ethereum always outperforms Bitcoin in low interest rate environments. And that's what I'm saying. If we drop to these levels, even get a bounce to the 0.5 of this monthly wick, it'll be an easier trade to come take out the previous monthly low into this fair value gap again. That's also where the yearly open is for Ethereum. If we trade down to those levels and Bitcoin bounces at the yearly open, that's all we need for Ethereum to outperform and make a new all-time high. If Bitcoin just rolls over, so be it. I'm happy with that. I sold Bitcoin at 120. I'm in Ethereum, Link, and another speculative play. And I think that's, just looking at the charts, but also supported by the macroeconomic conditions, I'm expecting more some highs from Ethereum. Because look at this chart on monthly, that is bullish. So again, I'd look at this, expanded, shallow retracements. Look how long it's taken to retrace. And look at those. We got relative highs at the top. Bearing in mind, we got the CME futures all-time high above that. So there's that relative equal highs, equal highs, more relative equal highs. There's this buy side liquidity stacking up. So we could actually come and sweep these lows, which would then create, which would then lead to most probably 0.5 of this wick, which is just an inefficiency. Wicks, you just got to look at as an inefficiencies, right? There was more buyers than sellers there. Simple as that. So there's the 0.5. So let's go drop down. In fact, actually, let's just do this rather. Let's grade this and divide it into quarters. You can see the body candles are respecting the 2.5 at this point, but this is the monthly chart, right? So it doesn't matter at the moment, but we're just using that monthly chart for the wick. So we could actually drop lower, hit the 0.5. Let's just clean this up a bit. Right, the midpoint of that monthly candle. We get a bounce there while Bitcoin goes and take out that low. That's a higher low on Ethereum, which would be bullish and what you would expect if Ethereum is to outperform. But regardless, if we get a cascading sell-off, I expect this bounce to form a wick and then to price to start trading to these highs. So that's analysis, guys. Won't keep you much longer. Thanks for joining. I'll be doing these once a week, maybe two. Otherwise, catch me in my daily journal videos. We'll be going over my model for NASDAQ, Ethereum, Bitcoin, gold, all sorts of things that apply to any market. So see you guys there. Cheers.